What is going on, traders? Welcome back to the Traveling Trader. In this video, we'll talk about some of the stocks that are on our watch list this week, some of the stocks that we're looking to buy, as well as some of the options that we're looking to get into. And I'll go over some of the major financial news stories and catalysts to watch for this week. If you get anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know some of the stock picks that you guys are looking at. And if you want access to the private trading group, link is in the description below. Let us get right into it. So we'll start with Bitcoin actually. Bitcoin had a flash crash over the weekend. Now, the reasons that Bitcoin flash crashed are due to several things, but those of you who aren't new to cryptocurrency and have been trading it with us since 2017 know that this isn't something new. These weekend flash crashes after Bitcoin hits all-time highs is actually pretty common. The usual round of FUD, along with the exuberance from the Coinbase IPO dying down, contributed to Bitcoin's decline this weekend. However, it has since recovered after almost hitting the 100-day moving average on the 1 day and is currently sitting at the 50-day moving average. Now, in my view, if your conviction is high in Bitcoin, then dollar cost averaging at the support levels makes sense, including this one. However, if you're looking for stocks to buy to leverage this downturn, then look no further than GBTC, or the Grayscale Bitcoin Trust, currently sitting around the 100-day moving average as well. This has been a pretty nice swing going all the way back to December 2020, forming this ascending wedge. Remember, trend is your friend until the end. So as long as it's in this wedge, I don't mind swing trading GBTC here. The Bitcoin mining stocks like Mara or Riot are also a good pickup here for a swing. Pretty low risk because you could set your stop limit below your entry. I bought Mara call options on Friday, which will likely be slightly down on Monday. However, if it does do the customary bounce from the 50-day moving average, those calls should be up nicely. Mara actually has a ton of upside if Bitcoin stabilizes here and doesn't break support. It was near $60 just a couple of weeks ago, and if we take a look at the options data for the May 21st expiration, you could see that Mara has a ton of call option contracts coming in at the $45, $50, $55, $60, and $65 levels. So options traders are banking on a big move up here coming up in the next month. If you want to learn how to trade options, I just released my full options course from A to Z, starting at the beginning and diving into complex strategies like iron condors, verticals, diagonals, etc. You get $100 off. There are a limited number of coupons. Link is in the description along with the coupon code. Okay, so that's it with Bitcoin. Let's move on to the next segment. Let's talk about energy here. So there is actually a pretty big catalyst coming up this week. The International Energy Agency publishes its Global Energy Review for 2021 on Tuesday. Now, the reason this is important is because obviously energy consumption and demand has taken a hit due to the pandemic, but it is now ramping up. And they will dive into different categories of energy such as oil, electricity, natural gas, and renewables, and hopefully provide estimates for what we're going to expect for the rest of the year. Now, if those estimates seem favorable, especially in the renewables department, we could see another bump in renewable stocks. If you go to the IEA website, you'll already see that solar PV is set to increase the fastest of all renewable energy sources in 2020. So I'm going to be looking at cheap sympathy plays on renewable stocks that have been beat down. If we take a look at fuel cell, currently sitting at the 200-day moving average, there is a pretty low risk entry here. Fuel cell dropped 70% from all-time highs just a few months ago, currently trading at $9.86. And if we take a look at fuel cell options data for almost every single expiry, you'll see just a ton of call options pouring into the options market, meaning that traders are expecting a big move here on fuel cell, or at least hoping for a big move here on fuel cell. But where you buy and where you set your stop limit are everything. A lot of people bought these risky stocks based off of YouTube videos, not really knowing what the price point that they entered represents. And in my view, these videos didn't really do a good job of conveying risk-reward analysis. So in this case, if I'm buying fuel cell at $9.86, my stop limit will naturally be just under the 200-day moving average at around $7.80. That way, yes, you can play risky stocks, but it doesn't mean that you have to bag hold fuel cell where you're down now 50, 60, 70%. Also, position sizing is everything as well. 50% of your portfolio can't be fuel cell. In my view, these risky stocks should only be 1 to 5% of your portfolio. And in my view, 5% is even too high. As a lot of you know, I'm doing the 10K challenge where I hope to exhibit some of these things such as position sizing, setting stop limits, etc. And you'll see that I don't hold a lot of these risky stocks. I do hold some of them in the portfolio because I like to mix it up, but they don't represent a large portion of the portfolio. Plug is in a similar boat as fuel cell. Plug is sitting at the 200-day moving average at just over $27. And if we take a look at the options contracts, again, for almost every expiry in the future, there are a ton of options contracts pouring in at the higher strike points. Another stock that I really like to hopefully take advantage of this energy catalyst is Sunrun. Sunrun currently sitting at $52. This stock was trading at almost $100 just a couple of months ago. They were also recently upgraded at Piper Sandler with a price target of $77. This would represent an almost 50% gain from current price points. So I might play options as well as stocks on Sunrun, and I will be posting all of my plays in the Discord group. All right, we talked about Bitcoin, we talked about energy. Now let's talk about earnings. There are some pretty heavy hitters reporting earnings next week. Now, based on my previous analysis on the markets, the hope is that the earnings season propels the market further and hopefully flows into a full reopening by summer. That way, the market can continue to make higher highs and 2021 will be a successful green year. Now, in terms of sectors reporting earnings, it's all across the board. We have firms like Coca-Cola and Chipotle representing the food and beverage industry. We have a few airlines with Southwest and American Airlines. There are a ton of financial companies reporting earnings like Comerica, KeyBank, American Express, and some of the pharmaceuticals like Johnson & Johnson and Abbott. So some of the stocks on that earnings list that I'm looking at intently are Netflix, because Netflix, obviously, we know that they are a powerhouse in the streaming game, but they've been facing stark competition from providers like Disney+. We also know that a lot of their 2020 run has been fueled by the pandemic. And if the market as well as the public are intent on reopening in the summer, if everything goes well, then Netflix, in my view, seems actually a little bit less attractive at these price points. There's also this insane resistance level here to contend with, which Netflix is close to at this point. So it will have to report something astronomically well for it to break new highs, something really unexpected. Otherwise, I expect Netflix to be trading in this range, and I will likely do an Iron Condor strategy, which is an option strategy that is neutral, that allows you to play within a range. And if Netflix falls anywhere in that range, then you get to retain 100% of the premium that you sold that Iron Condor for. Again, if you want to learn options, check out my course below. Now, if you're a fan of this channel, you know that I've been talking about rotating some of your portfolio into reopening plays, and Airlines falls in that line. And while I do own the Jets ETF, as long as some of the other airlines, I do not own Southwest Airlines. Now, this is why this is very interesting, because Southwest Airlines in the US is seen as a business flight provider mainly. And if they report higher than expected demand for business flights, we could see Southwest Airlines break out here. There's also hidden bullish divergence between the price as well as the RSI here. We've already seen travel companies break pre-pandemic highs without the real numbers to back it up. It's just based on hype and expectation as well as exuberance. You see Booking.com here trading higher than it was before the COVID crash. We also see a ton of call options at the $70 price point pouring in here for Southwest Airlines. So I might take a stab at the $70 calls for Southwest Airlines here, hoping for an unexpected breakout. Anyway, traders, those are the stocks and the catalysts that I'm watching this week. A pretty important week in the market, but I say that every week. If you got anything out of this video, leave it a big fat thumbs up. Leave it in the comment section below. Let me know which one of these stocks you're trading. And if you're trading stocks that I didn't mention, also put them in the comments below and why your conviction is what it is. Check out our private trading group if you want access to all of my trades and you want to follow the 10K challenge. Check out the options course below if you want to learn how to trade options. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.